Global News Update, February 20th, 2026. Good morning. It is Friday, February 20th, 2026. This is your daily global briefing. I am your anchor for today, delivering a deep dive into the most significant developments from the past 24 hours. We begin today with a critical shift in the geopolitical landscape concerning the stability of the United Nations. In a surprising late-night announcement from New York, the United Nations confirmed that the United States has paid approximately $160 million toward its substantial outstanding dues. This payment comes at a time of acute financial crisis for the world body, which recently warned of an imminent financial collapse. While the payment addresses only a small fraction of the nearly $4 billion the United States owes to the regular and peacekeeping budgets, it is being seen by diplomatic observers as a strategic olive branch. This financial gesture coincides with the formal convening of the Board of Peace, a new multilateral initiative aimed at resolving protracted conflicts, most notably the ongoing war in Gaza. Simultaneously, in the Middle East, tensions between the United States and Iran have reached a fever pitch as Tehran has begun construction of a concrete shield at a key military site in anticipation of potential strikes, even as the United States renews its 10-day ultimatum for a diplomatic agreement.
Transitioning from the world of diplomacy to the broader global economy, the narrative is one of resilient but divergent growth. The International Monetary Fund has released its latest World Economic Outlook, projecting a steady global expansion of 3.3% for 2026. While technology investment and private sector adaptability have largely offset shifts in trade policy, the IMF warns that the recovery remains uneven. Developing nations, in particular, are struggling with high borrowing costs and tightening fiscal space, leaving them less equipped to participate in the current growth cycle. This economic fragility is being further complicated by sharpening rivalries over critical minerals. In the United States, the focus remains on energy sovereignty as the Department of the Interior proposes a massive new lease sale in the Gulf of America. This move is expected to fuel state and federal revenues while reinforcing the role of the United States as an energy superpower, though it faces immediate criticism from environmental groups concerned about the long-term impact on marine sanctuaries.
In the realm of finance, all eyes are on the sudden volatility within the global bond and cryptocurrency markets. On Wall Street, the S&P 500 briefly crossed the 7,000 level for the first time on an intraday basis, driven by a surge in mega-cap technology stocks ahead of key fourth-quarter earnings reports. However, this optimism is being tempered by rising yields on 10-year Treasury notes, which touched their highest level since last September. In the digital asset space, a dramatic surge in the net worth of President Trump, largely attributed to his cryptocurrency ventures and international real estate deals, has sparked a fresh debate over the intersection of private profit and public policy. This comes as several foreign governments, including Saudi Arabia and the United Arab Emirates, have reportedly secured access to advanced computer chip technology and weapons systems following significant investments in ventures affiliated with the administration. Financial institutions are now recalibrating their portfolios to hedge against the potential for intensified regulatory scrutiny and the escalating trade tensions between the United States and its traditional NATO allies.
Turning our attention to the technology sector, the focus has shifted toward the global south as the India AI Impact Summit reaches its conclusion in New Delhi. Global tech leaders and policymakers have gathered to address the potential for artificial intelligence to drive inclusive growth and sustainable development. A major breakthrough was announced by Google DeepMind, with its CEO emphasizing that AI has now reached a critical inflection point where its impact on human history could surpass that of the Industrial Revolution. Simultaneously, the race for critical minerals is intensifying, with the United States officially launching Project Vault, a $12 billion public-private partnership aimed at establishing a strategic minerals reserve. This project seeks to reduce dependence on foreign suppliers for materials essential to advanced electronics and defense systems, a move that is being closely watched by China as it manages its own military purges and reshapes its AI-enabled warfare strategies.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce. The industry is currently managing the implications of a massive shift in trade policy, with a recent report revealing that 72% of trade professionals now identify United States tariff volatility as their primary regulatory challenge. This has led to a significant increase in documentation requirements and customs inspections,
with companies increasingly treating supply chain reliability as an enterprise risk rather than a logistical optimization. In the Indo-Pacific, the Philippines and the European Union have entered the final stages of a landmark free trade agreement. This deal is expected to expand investments in electronics manufacturing and logistics infrastructure, positioning the Philippines as a key hub for European companies looking to diversify their supply chains away from more volatile regions. However, for the immediate term, logistics providers remain on high alert as the ripple effects of the Lunar New Year shutdowns continue to strain global port capacity and air freight availability. That concludes our global briefing for today. Thank you for joining us.